after a really good week on the stock market, where the S&P 500 index increased by more than 2%, and that is right after a really good inflation report came out. But that report did also lack a lot of clarity about the interest rate, and that has left us investors in a bit of a weird spot and has forced us investors to focus more on value investing. And that has made finding discounted dividend stocks a bit harder than what it used to be. However, I've still managed to find 4 stocks that I do believe is trading at a great value right now. And with that said, then let's get straight to the first discounted dividend stock on my list today. And the first company on my list today is gonna be Nike, ticker symbol NKE. And this is most likely a company that you all know about. And it is one of the most popular brands amongst athletes. But with the higher interest rates, the higher inflation, and the higher cost of living, then does consumers tend to cut back on luxury goods. And buying Nike clothing is a luxury good, and that has had a negative impact on their sales and on their share price, which is now down by more than 15% during 2024 alone. And they are right now trading at just $91 per share. However, if we do zoom out and look at the last 10 years, well, then we do see that Nike has given a really good return of 140%. So they have definitely been good over the long term. And the analysts, well, they are also liking Nike at the moment. And they have rated them as a moderate buy. And they have an average share price sitting at $111 within the next 12 months. And that is an upside of 21.5%. And that is pretty great. And when being invested in Nike, well, then you're also getting dividends. And they currently have a dividend yield sitting at 1.61%, a 5-year growth rate in their dividends of 11%. And seeing companies with a double-digit growth rate in their dividends is always very, very nice. And they have been increasing this dividend every single year for the last 11 years in a row. And moving straight to the second company on today's list, and here we have one that I have been talking a bit about before, and that is United Parcel Service, ticker symbol UPS. And just like with Nike, then has the lower consumer demand had a negative impact on their sales. There is basically less product being bought, and therefore less products are being transported, and that has a negative impact on the sales for UPS, and that also has a negative impact on the share price. And they are right now down by 12% year to date, and is trading at a share price of just $138 per share. However, with them being a world leader within logistics, then I'm not really too concerned about it. It is basically just because the worldwide shipping has gone down, and that is out of their control. But when things start to turn around again, then I do think that a company like UPS is gonna perform very, very well. And the analysts, they do agree with that. And they have rated UPS as a moderate buy, with the share price sitting at $161 within the next 12 months. And that is an upside of more than 16%. And that is pretty good. And UPS is also paying some great dividends. And they currently have a dividend yield sitting at 4.70%. And that is very, very nice. And they have a 5-year growth rate in their dividends of 11.68, and that is also very nice. And they have been growing this dividend every single year for the last 14 years in a row. So UPS is looking very, very good at the moment. So moving on to the third company on today's list of stocks to buy, and here we have McDonald's, ticker symbol MCD. And they have, just like the other 2 companies, been heavily impacted by the higher interest rates, the higher inflation, and the lower consumer demand. And that has caused the share price for McDonald's to fall by more than 13% during 2024 alone. And they are right now trading at just $258 per share. But McDonald's is a really solid business. They are really good at understanding the needs of their consumers. And they are really good at producing new products. And they are very, very good when it comes to marketing. And that is a skill that really shouldn't be underestimated. And the analysts, they do also think that McDonald's is looking like a good buy at the moment. And they have rated them as a moderate buy, with a share price sitting at $304 within the next 12 months. And that is an upside of almost 18%, and that is really good. And they are also very good when it comes to dividends. And they currently have a dividend yield sitting at 2.58%, a 5-year growth rate of almost 8%, and they have been increasing this dividend every single year for the last 22 years in a row. McDonald's is definitely a really good buy, and they are very good when it comes to long-term growth and dividends. So if you have been looking at this company, well, then right now might not be the worst time to buy. So moving on to the fourth and last stock on my list today, and here we have one that I have been talking a bit about recently, and that is Home Depot, ticker symbol HD. And this is the largest home improvement retailer in the US. And I do think that right now is a golden opportunity to buy Home Depot at a really good valuation, because I do think that Home Depot is going to perform very well over the long term. And right now, with the high interest rates, that is making mortgages really expensive, and the amount of new homes being built is really low, and people are not really spending that much money on home improvements. All of that has basically caused their share price to drop by 6%, and they are right now trading at just $325 per share. But when zooming out and looking at the long term, well, then we do see that Home Depot has been a great investment, as they have given a return of more than 300%, and that is really amazing to see. And the analysts are also very optimistic about Home Depot, and they are forecasting a share price of $383 within the next 12 months, and that is an upside of 18%, and that is pretty good. But Home Depot is also really good when it comes to dividends, and they currently have a dividend yield sitting at 2.77%, a 5-year growth rate of almost 14%, and that is great to see. And they have been increasing this dividend yield every single year for the last 14 years in a row, and that is amazing. Home Depot is looking really good at the moment, and if you have been thinking about adding the stock to your portfolio, well, then right now might be a really good time to buy. And that was all I had in this video. Please leave a comment below and tell me which stocks you guys are looking to buy at the moment. It is always very fun to hear what you guys are looking at as well. And remember to like the video and press the subscribe button if you do want to see more videos like this in the future. See you guys in the next one.